Hello, everyone. I'm Hal Levy at Payment.com. I'm joined today by Miriam Shell, who is Head of Product US at Form 3. Welcome back for the latest conversation. Nice to have you.
It's nice to be here. Great to talk to you again, Hal.
FedNow, 5 months in, just about. At the time of this conversation, we're headed into the 5 month mark. So FedNow has gotten a little ground, has maybe given us some indication as to where things are. What uh, what has happened in terms of exceeding or trailing expectations in your view, and why?
Yeah, so FedNow is obviously a big topic. That's what we've all been talking about in the payments industry. And I think it's anyone's view as to whether it's, doing better than it expected, doing worse than it expected. My background, as you know, we've done this before, is I actually worked for the Federal Reserve before Form 3, and I was part of that FedNow team. So maybe I have some inner insights of at least what we were expecting back then. The reality is, at least from my point of view, I think it's doing exactly what it was planning to do. So they haven't shared that much, publicly. They have said there's over 200 institutions. If you look at their website, you could see, who's already online. There's multiple service providers, including Form 3, that's certified and supporting those customers as well. So over 200 is pretty good. You think about RTP. I think they're still under 400, maybe in the low 300s, if my last count is correct. And they've been around, for many years. So the fact that there's over 200 on FedNow is definitely a good sign. And we definitely think that both of the networks are going to grow once FedNow, comes out there. But there hasn't been a huge, I would say, newsworthy announcements around too many banks sending volume over it. So while I think the adoption rate is pretty good from a bank perspective, and they have also shared that there's a very large pipeline ahead of them, I think we're still in this chicken and egg. So we needed FedNow to go live. That was the first chicken or egg. I'm not sure how that statement actually works. And then we need adoption, right? So before volume moves, before there's more, it has to get that larger network than what RTP already had. And I think they're still in that kind of getting there stage. That's my view. I don't know. I've heard different things in the industry. So I will say I've heard people say, oh, we expected way more by now. And I've heard people say, actually, this is really good numbers, right? So by the end of 2024, FedNow is close to what RTP has already. That would be a really good sign.
Regardless of what side of the observation angle you may be, there are some data points already out there, and as you mentioned, there's a pipeline. So let's talk a little bit about the use cases to your mind that are gaining traction that would go according to, as you said, exactly to plan. And where are we seeing what we should have expected for FedNow, and where might there be some anticipation as to what's coming next for use cases?
Yeah, from a use case perspective, so A to A is obviously the big one, right, behind this. And when I say A to A, I don't just mean, any account to any account. I kind of mean the my own accounts, right? I'm moving from one bank account to the other bank account because that's where I pay my bill funds. I'm moving from my brokerage account. I think that's a big one that we're starting to see, or funding my brokerage account. I think the brokerage houses are waking up to that as well. And then there's some of this kind of new business, which I will say my personal belief is that will actually be the driver behind instant payments. I think there's going to be new businesses, new use cases as they start thinking about, okay, now I have a way to move money 24/7. I have a way to do it on the weekends. What new opportunities can I create? I think that's actually going to drive us forward. But we do see things like that. So car companies that want to be able to close their deals on the weekends so that you don't have to wait till Monday to fund your car, or hedge fund companies that want to be able to close deals and they don't want to have a life, so they don't want to wait for wire cutoff hours and wait till the next day. I think I've used that example before. I think there are going to be a lot of opportunities like that we start seeing moving over. Again, they start small, right? How big can you push out a use case if there's only 200 banks receiving when we have 10,000 banks that you need to reach? There was a great panel from FPC at the last FPC conference. That's the Faster Payment Council, where Netflix talked about using the RTP rail as an example and using RFP on it and how they're starting to use that. I mean, Netflix is huge, but they still talked about it's got to be used alongside your credit card payment because not everybody can get that RFP because not everybody's on the network, let alone accepting RFPs. So that's where use cases are going to have to like kind of start. And then as more bigs join, they'll grow. But I think the A to A is what we're seeing. I think it's what everybody expected to see, including FedNow. P2P is probably what we're not seeing. And again, what we didn't expect to see without the use or the discussion around the directory. I know the Fed has talked about their next release being focused on directory services and fraud. So I think we can all think from that that's a use case that they're looking to go after, or that they're at least looking to see enabled over the rails. And we'll have to see what that means with Zelle that's already out there, right? And how that would all work. But I think A to A is really where it's at. And then again, the business to consumers, the B2C world, as that's starting to mature and as they're coming up with new use cases, starting to see some of that. We also know that as part of that 200 that's already on, the Treasury is on the FedNow network. So what that looks like, what that means for the future is obviously a big deal. What they're going to start sending over the rails, if they're going to enable tax payments or anything like that. No announcements have been made, so we don't know what's coming there, but they are enabled. So you can imagine that they may start taking advantage of the FedNow rail like they took advantage of FedACH, and that could be a big driver as well.
When we start to think about what might be or what could be, are there technical considerations or challenges that are maybe putting a little friction into the mix for coming on board or actually using the rails already to get some volume out there? Are there any challenges in terms of the technology that are being experienced out there, and how do they get addressed?
Yeah, and it's been interesting to see. I do think there was this expectation that when FedNow went live, all the banks would start like running, right? And from a Form 3 perspective, we also had this kind of vision that we would start getting all these phone calls, or all the calls that we're already having. All those banks that we're talking to are very interested, but we're kind of like, well, let's see if it goes live. When it would kind of be like, okay, let's go. It hasn't quite happened. I don't know exactly why. Some theories are around either what you just asked me about, which I'm going to talk to, the technical burdens, or some of what's going on in the banking industry, some of the concerns that happened when, a few of the banks went under, was kind of like, okay, hold on, let's all kind of step back and watch what we're doing and make sure it's the right thing. There's definitely tons of interest. I do think those technical considerations are a big part of this. So you can be really, really interested in doing FedNow, but technically it's not so easy. It's not just as simple as connecting to a new rail and creating some ISO messages. You have to be up 24/7. Now they do allow some downtime, but obviously the intent is 24/7. So now a bank sits back and goes, am I looking at a much bigger project? Do I need to update my core? We know that the dependency on legacy cores is a big problem that a lot of banks are facing. Those cores do batch processing. They're not 24/7. Even if you're using it, you need something to stand in when it's not working. And so on the receive side, I think we are seeing more adoption. It's a little easier to get around those hurdles. Once you start wanting to send payments, how do you enable sending, but then tell your customers somehow that during certain hours you can't send payments? It kind of gets complicated. And so technically, there's a modernization issue of banks who haven't kind of touched this payments landscape world in their environment. That's difficult. And, I will say, obviously, coming from Form 3, it's one of the reasons I joined that company. Banks are really open to looking at, vendors and other providers that are out there who have built these modern solutions that are already enabled, platforms like ours that have already been running in the UK and other places where faster payments is already enabled, instead of them going and trying to build everything themselves and upgrade everything. So I do think the kind of legacy technology out there is one of the biggest technical challenges. And then I will say also, there's this dynamic of those banks who are already on RTP, right? So that was another thing. I was kind of like, everyone who's on RTP will just flip on FedNow. Like, why wouldn't you receive on both networks? They might not send on both networks, but just like FedACH and EPN and FedWire and chips, right? Most are on both, at least to be able to receive payments. So why wouldn't they do that? And we haven't seen it. Not that none of them have. Many of the banks on RTP are on FedNow, but not all of them. Even those who use a service provider, for example, who enables both, they haven't done it. So the question is, well, why? Like, what's standing in their way? Is it costs? Is it a fee that someone's charging? Is it because service providers who they've already used haven't enabled FedNow the same way. So if you're not on either network, you're going to want to consider using a provider who's going to give you one project, one implementation, and you get both, right? So someone who can build it, same data, you don't have to worry about the differences in the ISO messages, different connectivities, all these things that add up on the cost that's making banks say, I don't have time or money for this right now. Use someone who's going to do both of them the same exact way, right? And that's obviously Form 3's philosophy. But I do think that for banks who are already on RTP, it's not as simple because you can't just jump. And now you're like, oh, I have a whole nother project I have to plan for, more resources, more cost, more time. Is this what I want to be spending 2023 on or 2024 on? And so that's a little bit standing in the way.
Looking ahead at 2024, right? We have
I led you to that question very nicely.
Yeah, no. And, past is prologue. So let's talk a little bit about what we might see over the nearer term for 2024 as we start to get a little bit more of that pipeline working its way onto going live. Number one. And to your point about RTP and the fact that many of these FIs already have experience having been on the RTP side of things, may make the jump to FedNow have concurrent operability. And, is past prologue, are there things that we have seen with RTP that might inform how things progress with FedNow? What would they be? And where will we see a diversion?
Yeah, that's a really good point, right? Instead of the kind of constant mindset of looking at RTP versus FedNow, you can kind of look at it as what has FedNow learned from RTP and how will they kind of join forces to grow the whole market and industry together. Even when I was at the Fed, I always found this whole topic so fascinating, this kind of FedNow RTP, discussion, because we've always had two rails. Like I've said it so many times, we've always had it, chips and FedWire, Fed ACH and EPN. And I wonder why we don't see the future of this landing in the same exact way. And I think there have been learnings, and the Fed and the clearinghouse have collaborated a ton, through this. So learnings as far as the ISO messaging or even technical stuff of like kind of what's worked and what hasn't worked. And do we need more data? Do we need less data? Things around performance, things around something as minute as, hey, if there's a bank who's a huge sender, but they're sending them all to Bank Hal, and Bank Hal all of a sudden gets 1,000 payments, but Bank Hal's small and can't take 1,000 right? Things start rejecting, like just these minor little things that, sound so detailed, but we've learned there's been 6 years of traffic, right? So both RTP and FedNow can take advantage of that and build better solutions and put things and processes in place to kind of enable the future. And RFP is a great example. So you have RTP that had RFP out, that's been trying to drive it, grow its volume, with some success. And the Fed has put out guidelines recently about kind of RFP usage and stuff so that they can kind of collaborate and try to drive it together. Because ultimately, the US is huge, but you need both networks to be working enough similarly. I don't know if that's a word, similarly, for them to kind of drive the whole industry forward. And so that everyone can build solutions around this new type of payment, this new type of rail. That's the only way it's going to grow. When people say, how come ACH traffic isn't just moving? It's, why wouldn't everyone just move it over besides for the cost piece? It's also because there's tons of solutions built around ACH. Lots of vendors have products out there that drive ACH payments, and it's so seamless for banks, for businesses to use those solutions. We don't have those yet for RTP and FedNow. They have to get built. In order for them to get built, RTP and FedNow together have to kind of align so that everyone can build around it, and then banks can use those solutions. So I do think they're going to grow together, and FedNow has definitely learned from RTP. I think RTP is now also learning from how FedNow is doing, what they've done. And we're going to see kind of this like exponential increase is my vision.
I like your point that they need not be oppositional, right? They can actually be concurrent and in some cases even inform one another. So as you said, the critical mass gets done by having both there. And I think that's a great point. And that's a great look ahead to what's to come. I want to thank you very much, as always, for our conversation. It will continue and look forward to it.
Sounds good.